Hey, everybody. I'm actually in an airport lounge in Manila. I just flew 9.5 hours from Dubai. I'm recording this for you here because I got to get it to you as quickly as possible. So let's get right into it. Let's go. All right, everybody, let's get going here. This is really unusual, but what can I say? All right, so this is not unusual. In fact, gosh, didn't we look at this last week? Okay, let's get down to it. The market actually did a really good job late in the week. You can see the purple predictor remains insanely bullish, really, really bullish. And so to me, that gives, we should be looking at the market moving higher. Now let's do a little bit of volume analysis, which is really quite interesting. Down at the bottom, you see when we had the big drop back at the near the end of January, the market dropped heavily and volume went up. Then during the rally that we had in February for those couple of weeks, volume went down. The sharp move down that we had earlier this week, volume picked up, and then the rally over the last 2 days was on lighter volume. Generally speaking, the rule is that heavy volume confirms the move and light volume makes it not so important. So in the last week, we had heavy volume on the down days, light volume on the up days. That suggests, the volume analysis suggests that this market is really not in a bull market, that the last 2 days is just a correction in what is a bearish mode. But with the purple predictor in an insanely bullish mode, what's my conclusion? I have to balance them off and say that we're really in a neutral market. We're not in either a bull or a bear market. Now, that doesn't mean we can't make money. No, we can make a lot of money by superior stock selection. That's the key in a market like this. It's a market of stocks, not a stock market. Dow Jones, you can see here, we got very close to the red and green. They touched each other, widened back out, and then they narrowed back in again over the last couple of days. Still on a bearish side, slightly bearish side, not big bearish, but somewhat slightly bearish. Nasdaq, purple predictor, not as bullish as in the Dow and the S&P. So it looks to me like the Nasdaq is not the place to be. We want to be in the big old style industrials. Now, seasonality has done quite well. Once again, the purple predictor is insanely bullish. I've lowered the switch point down to, you can see, at about 156. At 156, if we break above that, I'll turn back to bullish seasonality. We're in the normally seasonally bullish period, which ends in May. And I'll show you the seasonality chart here in just a second. So there's still a couple more months. So a breakout above 156, I'll go back to a bull signal, which means that I personally will double the size of my long positions. Double. Right now, it's seasonally neutral. I say bearish, but it could be bearish to neutral. And I'll explain that here in the next chart. So right now we're in March, and we're supposed to be in an up move, and then we're supposed to go into a long, grinding bear move. Well, maybe the bear move started a little early. Maybe it started in March, but it's supposed to start in April. So we have to look at this as either bearish or neutral right now, unless we break above that green switch point. The yield curve, look, it's going to keep a cap on prices. It's going to not allow the market to really explode to the upside. Asset allocation remains a little bit bullish right now. You can see it's choppy now, showing that the cash flows into bonds and stocks are about the same. A slight edge to the stock market, though. Slight edge to the stock market, meaning that money's coming out of bonds and into the stocks. Stock market RISKDICATOR. Now, this was interesting. This is a big change. You can see we broke to new lows. And what that means is that they're starting to go into defensive sectors. They're starting to go into things like the utilities and consumer staples and things like that. They just don't want to take a lot of risk. This is a little bit bearish. Yeah, you can probably hear the announcement in the background. All right, anyway, let's carry on. Global shares, who cares? Now, bonds, I said we're going to rally, and they did rally. They came down a little bit over on Thursday and Friday. But generally speaking, I'm starting to create a slightly more bullish scenario for the bond market. But at this point, I don't want to trade them at all. Bond key factors, you can see kind of hooked down. the bond yields is the green line. The other three factors are coincident or leading indicators for bond yields. And you can see they all hook down, suggesting lower interest rates. And this is one of the reasons why I keep looking for a little bit of a rally, not a big rally, but a little bit of a rally. The dollar gave us a bull trap. Now, last week I said that if we broke above that high at about 90.50, that would be a good signal to get long. It broke above that, immediately came back down, giving us a bull trap. But then on Friday, we got the reversal bar up. That suggests to me that we're going to go take another stab at those highs. And in fact, we should get up to at least 9,100 on the dollar. So look for a slight bull market here. Gold would be the opposite of that. We should see a slight bear market here. But once again, really not tradable in my mind. The indicators, though, turned a bit more bullish. Up at the top, it turned a little bit bullish. The middle turned a little bit bullish. And the bottom was already bullish. So the dollar is well, anyway, the background factors for gold are a bit bullish here, but not enough to get me excited at this point. Oil, chop, 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 sideways, sideways, sideways. And that's it for what I have. I'm not into the Bitcoin this week. I'm sorry. I'm sort of under time pressure here. All right. You know what to do. I don't want to waste any time on this. You should be a subscriber. If you're not, shame on you. All right. Fully paid up members, hang in there for just a second.